Good afternoon and welcome back to Embedded Finance North America 2021. I'm super excited to be hosting this panel on embedded insurance. Lisa Moyle and Flora Pleguezuelas has assembled an amazing panel for us, and I'd like to take the opportunity to introduce the participants of this panel. Heading up in front is Andrew Rear, no pun intended, is an experienced technology and financial services CEO, has been a non-executive director for multiple different entities. He's currently the director of InsurTech Advice, which is an advisory group working with InsurTechs and their investors, as well as partners, including private capital, insurance incumbents, as well as financial institution. He really brings a global view to business with his experience across multiple continents. Next up is Andrew Jernigan. Andrew is the CEO of Insured Nomads, providing protection beyond the policy for those who go beyond borders. Global benefits and international insurance, really to provide expats, digital nomads, remote workers, travelers, world schoolers, and international citizens, of course, a frictionless solution set of products, something I certainly have needed in my life. Next up, we have Bruce Buttles. Bruce has over 30 plus years of combined experience in startups to Fortune 100 companies in technology, innovation, digital strategy, e-commerce, digital marketing, and of course, IT and business leadership. He is currently the director of digital channels at Humana and leads a 60 plus person team that is responsible for the creation of digital experiences. Humana is a 77 billion American health insurance company based out of Louisville, and in 2021 ranked 41 on the Fortune 500. And by the looks of his LinkedIn profile, I think he finds time to seriously hit the ski slopes. Last but not least, we have Matthieu Soule. I absolutely loved his LinkedIn tagline because it started with enthusiastic about people. I think that says an awful lot about him. And he loves new technologies and startups that are changing the world. He heads up the Innovation Lab at BNP Paris in San Francisco, advising large international clients on open innovation and their digital strategy, as well as identifying relevant partners for them to work with. Matthieu is really passionate about the environment. He is also a mentor to the Sustainable Ocean Alliance and was recently featured as a top sustainability leader to follow by Sifted. I'd like to welcome all of my panelists and thank you very much for your time today. Following on many of the discussions that have happened earlier in the day, I'd like to kick it off with the first question. I think we've heard a lot about embedded insurance and the scale of the opportunity, but really as part of a broader element, I would like to take the opportunity for each of you to share some thoughts as to why you think this is suddenly accelerating so dramatically. So we don't have a live buzzer to pipe in, so maybe I'll start with Matthieu.
Hi. So I guess the topics have been accelerating the last few years because many businesses now are selling digitally. And so the ability to embed, in fact, financial services in general is becoming dramatically accelerated. In the case of insurance, so to give you some context, BNP Paribas has a large business called BNP Paribas Cardiff. So we are doing B2B to see insurance for like creditor insurance or like warranty extension. And so we are working with banks, telcos, retailers, or automotive manufacturers. And all of them, in fact, are seeing a shift to traditional brick and mortar sales to digital sales. And the fact that digital sales are booming, especially with the COVID, it's accelerating the topic on how to embed, in fact, insurance product or financial product within the customer journey of the partner. So I think for me, it's the acceleration of digital sales across different channels that is creating a lot of opportunities for existing players or new players, insurtechs or large tech companies to embark on the insurance journey.
Andrew Jernigan, certainly in terms of the work that you're doing with nomads, what do you see that's really pushing this acceleration?
I see that the global traveler is dependent on their phone, their laptop, for accessing everything they need. And they're accustomed to using Chrome extensions. They're accustomed to using other environmental integrations to find what they need. They see it with AppleCare, with when they buy their phone. It's an easy embedded insurance opportunity. When they purchase their phone, they're being offered insurance. So it's one of our latest is to integrate in a Chrome extension that tells you when flights are delayed, when flights are often, or if it's an airline that has hazard issues. And within that Chrome extension, it says, okay, this country requires insurance if you're moving there or relocating there, spending time working in that environment. So I feel that more and more people are looking to this device for what they want. So that means it must be embedded.
Thank you, Andrew. I think I agree with you that the accessibility to information through portable devices, our phones, our iPads, has certainly changed our ability to be able to customize engagements with insurance. I think, when I look at embedded insurance is basically me walking up to a counter to rent a car and it says, would I like to include my insurance? I think we've come a long way from there. I'm wondering if we can maybe talk with your experience of what you see as really being some great examples of embedded insurance today. And I think I'll move over to Andrew Rear, and certainly from the InsurTech advisory that you're running. What are you seeing some emerging ideas that have been innovative for you?
Yeah, I mean, one of the ones you can see on my T-shirt, I'm the chairman of Buttles, which is an embedded insurance company. We didn't set out to sort of be embedded with a nice label. It's just that that's the logical way to actually buy insurance for most people, because, you don't walk out of your house and go, it's a nice sunny day, oh, I'll go and buy some insurance. So, you buy insurance because you're doing something else. So in our case, it's drivers, part-time drivers, delivery drivers, Lyft drivers, and so on. And these are people who are they drive their car as a private user, and then they flip over into work mode and they start delivering or acting as a taxi. And so because of that, they need insurance. So it's actually quite logical that you would just embed the insurance buying experience in their contracting experience. It does a couple of things. I mean, the first thing is it just makes it easier for the customer. The customer doesn't need to re-enter a lot of details, explain what they're doing to the insurer, because we know all that, right? We get it all from Lyft or from GoPuff and our other partners. Secondly, it brings us a bunch of really useful data that we can use for underwriting and pricing. In our case, our drivers tend to have pretty poor credit records, not because they've got bad credit, but just because credit agencies haven't caught up with the 21st century yet. So instead of using credit data, which we think is discriminatory, we just use their driving behavior, because that's eventually what we are, what we're insuring. So because of that, because you get that embedded experience, because we only have to charge for the insurance when they are actually working, so the more they're working and the more they're earning, then the more they're paying for their insurance. It's just a much more natural way to protect yourself. The only people for whom embedded insurance is not the natural way is the insurance industry.
That's a brave statement. And it brings me a little bit to my next comment or / quote, which is, you never really buy insurance, you're sold insurance. And I think I'd like to ask Bruce, I think certainly your experience and being in an incumbent, exceptionally large insurance organization, and looking at the digital experiences today, what do you think is changing? Because I think a number of years ago, many of the large insurance companies they looked at their customers really as the brokers, right? So that's who they had to engage in order to be able to get to their customers. So what do you see as some of the key changes that's happening in an organization such as yours today?
Yeah, it's a great question. And, I would say probably the leading trend is the fact that especially in healthcare and health insurance or dental insurance, and is this switch to the consumer truly being the customer. Is the consumers becoming much more empowered to search for financial vehicles, insurance vehicles, and as well as healthcare in and of itself, in a much more consumer-centered focus way than has been historical. I think we're still at the very beginning of this evolution, but healthcare and health insurance is becoming more consumer-focused. It seems almost obtuse to say that, but your point is exactly right. Is that typically, insurance companies focus on agents and brokers. But I know our effort is very much to say, let's empower the consumer. Let's empower the patient, if you will. Make that, that health insurance and that healthcare experience akin to an Amazon experience or an Apple or a Google experience. Let's make it that simple.
I think that's a really great point, and where I'd like to move the discussion as you focus, especially on the incumbent insurance organizations, and as we move to emerging insurtech startups, it's the power of data. Like, there's some really positive components to it, but then there's some, I guess it's my Swiss nature that terrify me. What are some of the opinions regarding available data? What are the hurdles to getting to that data? Let's talk maybe about compliance, regulation. What are some of the things you've seen? And I think I'm just going to open that up to whoever wants to jump in first on that one. It's a bit of a sticky question.
Yeah, I mean, maybe I can jump in. I think the real question here is just how regulators catch up with consumers, and data privacy is important, but I sense that a lot of data privacy regulation really comes from a different place than where consumers come from. The idea that there should be any barriers to let's say Lyft or Uber passing me data, which so that I can insure a driver on their platform, seems to me absurd, because it's not that's not in anyone's interest at all. And of course, then I have to look after that data, and there has to be privacy standards around it. I think the challenge is that the world here is moving really, really quickly, and regulators are never going to move as quickly. But in my sense is that by being able to make use of more data sources, we can solve some of the problems that we already have. I mean, I mentioned credit score already. I think that in the insurance world, regulators are increasingly seeing credit score as something that shouldn't be used at all for insurance because it is discriminatory. And replacing that with something that's directly relevant, I think is the right thing to do. What we eventually need to get to is a set of broad principles around things like discrimination, around things like control of data. So using data for the purposes that the customer would expect you to use it for, and away from some of the rules which I think at the moment just get in the way of innovation.
I think that's a really good point. And sorry, go ahead.
No, I was just going to build on that because, Andrew, I think you're bringing a great point. The first thing I thought in my mind is that's the paradox. I don't think we can underestimate the power of data and the power of data sciences as really the bedrock of the entire industry, of the whole idea of embedded finance. Is that because without the data and without the data sciences, I propose it's not possible. It's not viable. So that's the paradox. It's like we have to protect the data, but at the same time, without liberating the data, meeting the customer's needs at that moment, that intense moment that they may have, where the product would be viable, is not possible. You can't reach the customers. You don't know who they are, or who might be the right audience for your product, and you certainly can't deliver it without that data insight and science as well. So it's definitely a paradox, But I would agree with you is that quite often we have to, I think, help lobby with those regulators to accelerate their pace of change.
Yeah, I really believe there's a lot of work to be done there. And I think the element from the regulatory side, but also from the use of data, is data at a single point in time is static. Historical data doesn't necessarily mean predictions around future behavior. And I'm wondering what some of your thoughts are regarding, somebody who might have today, if we look at credit score as a primary element in terms of insurance qualification, if we look at behaviors, and so either towards your house, towards your home, towards your driving, that past behavior, and how do you track future behavior moving forward, and how do you adjust that in terms of, I guess, in my ideal world, which is that real-time insurance. What are some of the thoughts? And I think I'm going to point to Matthieu, because I think certainly looking at the Innovation Lab, what have you seen around there, or some of your thoughts happening around the point in time of data and how it's impacting insurance ability?
Sure. So I guess we can take, for example, the auto insurance in the US. That there is a few companies on the market right now adapting, in fact, what we call pay how you drive. So basically, they will assess for a number of days, in fact, the behavior you have, if you're braking a lot, if you're speeding a lot, etc. And based on that, they will adjust your premiums, and doing the same sometimes not just for behavior, but just the number of kilometers you're doing. So as I guess Andrew was saying, this kind of adaptability of the insurance based on the actual behaviors, how much you're using on other services, how much you're using your car, etc., is something tremendous. And I would add a point and one other example in the home insurance industry. So one of the largest startup in the space, Hippo in the US, actually is using a very few data points. You're just entering your address, and based on that, they are doing geospatial analysis of your roof, and so they will know, in fact, more or less if the roof is in good shape or not. And in the past, you needed to answer yourself a lot of questions. What was the year the house was built? What was the last time there was reparation? And a lot of consumers actually were not sure, actually, especially when they were renting, when exactly this kind of stuff were done, or even as a homeowner. And so it's very simplifying the life of consumers, I think, to have this kind of beyond embedded finance, but to have this kind of open data connectivity sometime between systems, actually saving a lot of time for consumers that at the end wants to be insured for what is living, or where is living, or how is driving. And sometimes it's over complexifying on the insurer side what was done before, which was a lot of questionnaires, a lot of papers and back and forth. Now it can be almost automatically updated, which is saving a lot of time and effort for everyone.
I agree with that, and I think it's having significant impact on business models. A second favorite quote I have is insurance is something nobody wants, but everybody needs. And that ability to be relevant, I think every financial institution is always in their journey mapping, trying to find that moment of truth. Data allows you to get to that moment of truth to make insurance relevant. I'm curious on thoughts on what's happening out there in terms of data relevance and finding those moments of truth for that insurance conversion. And maybe let's look at it from two sides, maybe from the insurtech startup side, as well as from a large incumbent side. So I think, Bruce, perhaps I'll pass that question to you first.
Oh goodness, where to start? Yeah, I would say certainly the fact that maybe I'll go with personalization. Personalization I think is one of the keys. Is to we mentioned data again as the foundation to be able to have the appropriate data to be able to build relevance into that experience. So, for example, one of the things that we focus a lot on is our search experience. So you come to one of our digital properties, is being able to provide to the customer the most relevant information that they need for what they're coming to look for. So we spend quite a bit of energy on not only making sure we have the right information, the right content indexed well, but we understand what the customer's needs are, what their profile is, and their behavior in the moment while they're on our digital properties, in order to provide the most relevant content for that context, for the individual and for the context that they're in right at the moment. And we use a number of different tools, for example, AI-powered search engines that we model and help us be able to build that relevance. Because the trick is that it's not static at all. It's constantly flowing. It's constantly changing, by the minute. So that's why we have to employ things like data science and machine learning to help drive the relevance of that experience.
Thank you, Bruce. Certainly lots of insight there and experience coming to play. One of the things that, when I look at alternative business models and how those models are changing, I look at Tesla right now, as I think is a great example, who, because their cars have been more expensive to insure, are looking at embedding their own insurance products and basically using the data that they're pulling from their cars to be able to do that. How do you think those relationships are going to evolve? And maybe I'll throw it back to an incumbent insurance company. Where do you see that evolving in terms of friend or foe partnerships? I think we're going to see a lot more of these. So back to Bruce. I'm going to put you on the hot spot here as to, and I think same thing as Matthieu. I think both of you would have an interesting opinion here.
Well, it's I'd love to be able to say that the healthcare industry is following right behind Tesla, and we're going to be innovating just as quickly. But due to the nature of healthcare and health insurance, I think it's going to take a bit more regulated pace, if you will, of evolution. But where I think some of the opportunities are is, first of all, we're, I think, very much at the infancy stage, and all of us understanding what are those opportunities. In sizing them. Again, back to the data, much of it is about using data to understand where are those opportunities that our customers are going to gravitate towards. It sounds almost silly to throw some of these ideas out that I know I've been brainstorming, where things like, let's say I just, got out of the hospital, I had a shoulder surgery, and perhaps I want to, add a small insurance product on the way out of my discharge from the operating facility to say, hey, if there's any other, further complications or additional out-of-pocket that's unforeseen, out-of-pocket costs, maybe I want to, protect myself from some unexpected out-of-pocket expense relative to my shoulder surgery. Who knows? So I think that's where we're at right now. Is that there's no shortage of ideas. But having the insights and the intelligence to be able to determine, is that a viable business model, and begin to test those things out in specific markets and situations and use cases, I think is where we're just starting that journey as an industry.
Maybe to build on that, I think there is a shift in the business model, because historically, for many insurance products that were sold at the point of sale, so think about the warranty extension for your TV. It could be also you're buying a new smartphone, you have smartphone protections. Historically, you had to pay someone, in fact, commission them as a sales associate in the store. And when you're selling it on mobile or digitally, in fact, you don't have anymore this kind of intermediaries to pay. So it's changing a little the dynamic in terms of business model. And many new merchants, and I will phrase it like that for Tesla too, many existing, in fact, merchants or players that have a strong relationship with their clients are thinking about it in a way, in fact, how they could better monetize, in fact, this relationship. And financial services, either banking or insurance, is a very good way to monetize better, in fact, a relationship. So we're seeing this kind of interesting move. Both the traditional channels are decreasing a little. As you can see, in retail, I think today in the US, 18% of the total retail is done e-commerce. So you're shifting a little the dynamic of the business model of existing distribution channels, and new players or new, I would say, new distribution channels or new players are also looking to have a better, I would say, balanced relationship, either internalizing the insurance business, either working with the existing incumbent or insurtech, but still seeing a little different share of the revenue, in fact, on the product. So I think it's one of the big shifts, in fact, we're seeing in the business model in the industry.
So yes, to his point, you see the Milo product developed by Lockton. since people are going digital, they're integrating the different providers for whether it's pet insurance or others, and then embedding that within payroll companies and the marketplaces so that they can reach the consumer through these digital means. You have the similar model with assurance.com, which is taking those, instead of going through the traditional broker intermediary model, they're going after these digital opportunities with embedding within that. And then you see the non-traditional hotel companies contacting us, even saying, okay, can we embed insurance in the daily room rate? Just buried in, so that people will trust coming to our resort island and dropping $5,000 on a hotel room when they know that they're not hotels and evacuation could be required. So it's the pendulum is swinging from embedding an employer of record, your deal, remote globalization partners, all the way to direct providers, such as the Teslas and others. So yes, it's embedded is certainly the way to win the customer trust. So it's manifesting in many ways, including the intermediary route.
And I think this, what you just described, Andrew, there is the real business model shift. So your customer doesn't really want to buy from an insurer. They want to buy from Tesla or from that hotel group, and that hotel group wants to know that that the customer is protected, because eventually, if it all goes wrong, the customer is going to blame the hotel group because the insurer is somewhere in the back. So what you're going to see, I think, then is a dismantling of the value chain, so that distribution is increasingly comes through the channel the customer comes to use and the brand the customer comes to use. And then insurance really just has two parts. One is this sort of regulatory transformation layer. So where you make sure that the product's an appropriate product and it's sold properly and it's in line with the various laws and regulations, and you're protecting people's data and all of those things. And then behind that, you have the capital layer. Eventually, if you're taking risk off somebody, you need to cover that. And that's very much what we are building at Buckle. We are building a regulatory layer, and that's our business. And we are using external capital and finding a way to transform that so that somebody else can provide the capital for it. And then at the front end, we just work with whichever brand brings customers who need our kind of protection.
We've talked a lot about some very innovative and unique ideas that are coming out in terms of embedded insurance. I think we've talked to the opportunity and accessibility to data. I think also we've talked at some of the challenges on managing that data. What I'm really looking at is, and I think really to gain two perspectives, is what can incumbents do today of working within their legacy system infrastructures? If they were going to prioritize it, where should they be putting effort today? And I kind of open that up to the floor to whoever wants to jump into that one.
I guess I can start. So I guess on the embedded insurance side, the big topic is how to better integrate with any merchants. Let's say like large e-commerce players, large automotive players, banks, digital banks, etc. So you have raised this connectivity with the external world, which we could simplify it with open APIs and a different set of APIs. But beyond the APIs, there is also like assets, is how to make sure you have the proper reporting, proper customer journey, also on the best way, in fact, to embed the insurance. So I guess is a critical part. Or the other part, which are more the legacy one on the claim management, etc. Many players, including the incumbents, are looking to digitize some of the claim management, or even doing it almost real time for some of it. But at least the integration part and being able to very simply, in fact, for the merchant side or the partner side to integrate it is what I think is very critical right now for the incumbents or the insurtech.
Yeah, there's no reason why an incumbent couldn't do this. I think it's fair to say that they have ceded the ground to the insurtechs who've moved faster, spotted the opportunity, and really gone after it. But eventually, if a startup can build it with their limited resource, limited money, and limited experience, then an incumbent ought to be able to. I think, though, you have to see this as building and not transformation. And maybe you do transformation to bring this into your core later. But if the opportunity is there to get, then as an incumbent, I think you just have to build and go after it.
Andrew, I think that's some really good points. And as part of what you come across in your advisory, what are the key questions that are coming out? And certainly that migration to software as a service, migration to cloud, no code, low code platforms. What are some of the top topics?
I mean, the big question is always, do we partner with a startup or do we build it ourselves? And my answer to that is, you should build it to yourself. You should build it yourself unless you can't, in which case you should partner. Frankly, most often that means you should partner. But if you partner, then you should be clear what you bring and what you need your partner to bring, and what your economic model is. So another business that I work with, Ticker, we partner with a large insurance company on some business, and they're very clear that we bring technology and product expertise. They bring capacity and balance sheet and a large relationship, and that works because everybody knows what it is that we're trying to do.
Tough choices. I've certainly been on both sides, from looking at it in the early stage company as also in an incumbent. Certainly there are challenges to innovation in large incumbents, and much of that can also be people and process driven. I'm curious, within Insured Nomads, Andrew, like what are you seeing in terms of this business of partnerships that you're looking for that make sense, or elements that, so looking at it coming from the other side, as to why you think you'll make an ideal partner to an incumbent in terms of the product suite that you're offering?
Well, I believe that one of the advantages of partnering with a startup is the agility, the ability to adapt quickly and to implement in a fast manner, and as well as having the APIs, the dev teams able to deploy in a swift manner. So we're looking for those distribution partners that are willing to think outside the box. And the appeal, as they look at us, most of our competitors are strictly medical, whether it be travel medical or expat global health. And with us, we've built in partnership with reinsurance partners, we've built a tech suite that goes beyond the policy, including AI-driven components, as well as GeoIP tracking, check-in, and boots on the ground response. So a lot of this is on our ability to integrate the technology. So companies are looking for people that are going beyond the policy.
I know we're seeing a couple of different models. Certainly, I think there's the build it yourself, there's the partner, and then there's the acquire, right? Both of those are seeing a lot of headspace right now. Any comments on the just acquire the technology? So maybe I'll place that one to the bigger incumbents like BNP and Humana. Do you have in-house venture groups that are scouting and looking at investing in technologies?
That's certainly the case in Humana. In fact, I think I run up a quick slide the other day, and I was looking at the 10 acquisitions we've made in the last 5 years, and I don't think it's limited to that. So certainly, we're for much of the same reason, for that agility. But the other thing I would mention, though, besides just acquisitions, is when we do decide to build, the models are evolving very quickly. You mentioned one of my most favorite topics a minute ago was low code, and we're beginning to make this shift from purely a product development and product management mindset to a platform mindset. And that's really helping us to back up, and rather than say, oh, we're going to build this particular product or this particular digital product or the digital experience, we're looking at creating those platforms that could power any number of experiences. We actually used some low-code platforms and machine learning platforms combined. We built it ourselves, but we used those platforms to actually create COVID-19 experiences that we needed in record speed. And the reason why is because we had started this platform mentality, building these platform capabilities. And then, matter of fact, our very first COVID-19 testing locator, to be able to find a test way back in the beginning, took us about a weekend to build. And then the first full version was 4 weeks. So the way that we're building, when we do decide to build, is evolving drastically by using these platform technologies like low-code.
Yeah, to quickly complement that, BNP Paribas is very active in the startup investment. Just on the insurance side, we have a fund called C Entrepreneur, which is investing into Europe, Latam, and Asia into either new potential distribution partners or technology assets. That's the insurance business, in fact, could look into. And so in general, in fact, we are, I would say, in the next few years, I will guess, in fact, many incumbents will accelerate and acquire more and more technology on the market, because as it was mentioned before by Andrew, like the buy or build question is coming across, and at one point, in fact, acquisition could be a fast track, in fact, to make it. That doesn't solve the issue on say the integration of the acquisition, but still it's helping to accelerate the time to market on some stuff.
I think as we head towards a close, I'm going to ask for what I call a little bit rapid fire question and a little bit of context and example. So I was heading out to play a game of tennis last week, and I looked at my arm and my Fitbit wasn't there, and that's like 15,000 that wasn't going to get recorded. I almost canceled the tennis game. I look at these aha moments that are happening in connections of data that are going to be phenomenal in the insurance wise. Like I keep looking for my Fitbit to say, okay, you did your 10,000 steps. Let's go in and relook at your life insurance policy. Let's all of these more momentous moments. And I'm kind of curious, since we're all in the industry, what have been your aha moments where you said, oh my goodness, I get this and I get where it goes. So if anybody wants to jump in first, kind of that future vision of where you see this, I open it up to the floor.
Well, my aha moment was 6 years ago when I first started working with Insurtech at the beginning of the wave, and just seeing what is possible, seeing these people who, I think Bruce said it at the start, they look at the customer and they go, how do I make this work better for the customer, as opposed to how do I make this fit in an existing industry infrastructure. And that, for me, that change of mind shift, that change of mindset towards how do I build something that really works for the customer, that's fundamentally changing our industry.
Yes, it's got to be relationally focused, customer centric, and so many times it's transactional. And that's my aha in this, is that, okay, service through WhatsApp, through Telegram, through chat, through every method that the consumer is using today. That's what they're accustomed to. No one wants to pick up the phone and call someone. They really don't want to email, to have this long thread of emails. They want it how they're accustomed to communicating with their friends. And it's almost still. So we've got to go relational.
Well, one of my personal manifestos is changing lives through innovation. So I would say that that's got to be one of the key things that we all have to focus on. I think we've heard that thread a lot, is focusing on the customer. It's got to work for them. It's got to be personalized. But I think at the end of the day, what really drives me, and I think drives most of us, is, am I able to literally change people's lives by using all sorts of new technologies and new techniques, truly innovative, And am I open-minded enough to kind of lean in to those new, different, transformational capabilities, and be okay with kind of looking in the past as the past, and constantly reevaluating how we do things, how we build things, and how at the end of the day we truly transform and it changed people's lives.
I think the aha moment for me was what we observed, in fact, in Asia with the Tencent of the world, or Alibaba, and meaning like how basically we could very easily, in fact, without friction, embedded insurance product into e-commerce experience, ride-sharing experience, etc. And I think that's what we are right now experiencing, both in the US and Europe, to have this kind of not super app, but still like frictionless experience, where at the end of the day, the consumers within this existing workflow, in fact, is having the ability to subscribe to a new product, or sometimes they are already like bundled. But I think it's where the industry is leading, and I think it's a very interesting development.
I want to thank all of our panelists: Andrew Rear, Director of InsurTech Advice; Andrew Jernigan, CEO of Insured Nomads; Bruce Buttles, who's the Director of Digital Channels at Humana; and Matthieu Soule, who's Head of BNP Innovation Labs in San Francisco. I think we've had some great topics on the data opportunities coming out in terms of embedded insurance, as well as a vision towards the future. And I think we've talked to some of the challenges, certainly on incumbents, talking to partnership, talking to acquisition, talking to build themselves. I think there's a lot of meat here. Happy for people to follow up individually in terms of their questions. I think contact information is available through the primary website. And once again, thank you. Great session. Looking forward to seeing what's coming next. Have a wonderful afternoon. Bye-bye.